Good morning, 10%ers. It's Michael with Trading Escapes. You can find us at tradingescapes.com. It's Wednesday, January 9th, 2019. We're back at it again for another exciting day of trading. Looking to take one or two trades on beta names AMD and MU. MU's had an interesting pre-market. Look, we can see it pull up, aftermarket, pre-market, almost $1. So we'll probably, have a little bit of bias to this to the long side, but we'll see what happens. You never know. We're just looking at the technicals. We're trading a range. We're looking at that range for continuation. We've got the fib retracements on here, but we're not looking for retracements. We're just using those for levels. It's a convenient drawing tool on Thinkorswim that we can use. So we got a couple minutes to the bell. We are going to pause, and I'll be back with you in about 2 minutes. 3, 2, 1. Right. As always, we kind of just start off by marking off our levels and seeing what we got going on here. I got AMU up on another screen, and we've got it here in a different section. So just giving it a minute. Got to pull up on out of the gate. You run it a little slower. So again, for what we're doing, we're playing a range, and really more importantly, we started this in December. And basically trying to give ourselves some discipline and just slow down our trading. And that was different. Hang on a second. MU is holding steady. $59 as a runner setup on $49, I mean. MU is really setting up to run down here. Having a little action in MU at the same time. It's pulled up, hasn't quite triggered. $49's the trigger for AMD. Got an alert set to the upside on MU before the trigger. Go take a look real quick at what I'm talking about. So triggers up here. So back to what we were saying. So basically these fib levels, we're just using them from 0 to 76.4 is a 50-cent move, and from 100 to 23.6 is a 50-cent move. So we're just watching that range play. We're watching it, if it can put in enough strength to one side or the other to run 50 cents, have a pullback, then what we try to do is we try to take 30 cents off of that from a continuation standpoint. Very simple. What's not simple is doing this consistently, day in and day out, sticking with your plan, not the strategy. The strategy, what I just described to you, is the idea and the execution and the management, right? And not in great detail, but all together, that's the strategy. The idea, the execution, and the management. The plan is what we trade, when we trade it, how many times that we trade it. So that's when we started in December to say, we're going to trade this strategy approximately 1 to 2 times every day for the entire month. And, you know, I'm not going to say that we knocked it out of the park, but we learned a lot by what we were doing wrong, and we stayed safe. So, you know, that's basically one of the reasons that we're sharing this with you, is just to, you know, how do you do this? Do you jump in with both feet? Do you start buying 10,000 shares? Absolutely not. You have to find a way to stay safe in the game. So this is the way that we've found. You know, we've only been at this for 6 months, and we have to find a way to, you know, survive. Stress, you know, like I always say, stress builds skill, which builds confidence. Confidence is the emotional, that's the mindset. That's what you need to be a trader. We just triggered on MU, triggered at 42. Having a bit of a pullback. We have an entry back at our trigger level. Just triggered as well at 05. Back to the whole dollar. We're in on MU. We're in on AMD as well, both long to the upside. Just hit our target on the MU trade. Switch over here and see that. So we just hit 300, easy pull up. We'll make sure we don't go red on this AMD trade now. Putting in a lot of resistance up there at the 20 level, 2120. I'm just trying to ride it out. Trying to let it work. Again, 2120 hits. Pulled through it this time. In the driver's seat. See what happens right here. This is going to be, and we're seeing some pressure to the downside. And we're going to get out right there at 2120 and lock in $168. We're going to pause just to see what happens here. All right, so we're going to wrap it up. Just looking at the trade, we did have some consolidation at that 2120 level that we were watching. And if we would have held the trade, we could have taken full profit on it. So, we cut our win here by about half. We should have got 300. We got $168 out of it. But we did. So management, a little bit of an issue there. But we did, obviously pull full profit out of, or hit our profit target, and didn't pull full profit out of it. As you can see, it continues to go up and up and up here. We jumped in at 35 and got out at 65 right here. And it is continuing to go through the roof. So there are a lot of people had this on a watch list, MU for long today. So, excuse me, hopefully everybody's making a little money in it. It's still showing strength right now. So it's, the moving averages have kind of aligned with the stars here. We've got the 9, 20, and 50 just pointing straight up. So it'd be interesting to see what happens the rest of the day. AMD's, just a little bit weaker. It's kind of aligning now. The 9, 20, and 50 are sort of trying to get there, but it could just come up here, make a break down. It depends on what happens with the market today. Comes back and test the 20, test the 50, and just sell off for the rest of the day. Speaking of the market, let's take a look at the SPY just to see what's going on. Wow, look at that. Well. It's quite the red candle there, huh? Wow. I say that it's not even a full dollar. It's just the way it's printed on the screen. But interesting. The volatility index here. Wouldn't want to have been in that. Huge gap up on the Vanguard ETF. So this is one of the things that we struggled with, just several short months ago. Is we came into the morning, we had success, and boredom starts to play out, if you can believe it. Probably not for everybody, but for us, definitely. That you prepare and you're all ready for the morning, and within the first couple minutes it's like, okay, you're done. And then you're like, whether you want to consider it, I don't really consider it FOMO. FOMO used to be a bigger part of it. And I'll be honest with you, FOMO hits us more when we're listening to other traders trade and what they have going on, which is a great idea from a learning perspective, a horrible idea from a trading perspective. But FOMO is not really, December, which I tell, I'm really convinced that everybody needs to do this, is just, make a plan and trade it. Calm yourself down. Whatever that plan entails, it can be different. I mean, if you're trading a gap and go strategy or a beta names or, high cap, low cap, it depends on what you're doing, but that's what you do. that's what you're trying to stick to. And, so far, that's really helped us and helped the mindset get to where it needs to be. Like I always say, stress builds skill, which builds confidence. You have to have confidence to trade. It is not an emotionless game. You have to have the confidence, which is emotion, to be able to do it. The next emotional hurdle here for us is to increase size. There's no different. The mechanics of it are all the same. The button pushing's all the same. The idea, the management, the strategy, the execution's all the same. What's different? The only thing that's different is this little number up here, right? Is this number goes 1,600, 4,000. I mean, if we're trading MU, right, and we traded 10 times the size, traded 10,000 shares on it. Now this would be, keep in mind, this would be in two different accounts. I don't know if there's enough liquidity in MU to confidently trade 10,000 shares. So when I say this stuff, there are some other things, playing behind the scenes. But, as you're seeing that go, $1,000, $1,500, $2,200, the feeling of greed, well, not greed, the feeling of, it's almost more on the panic side of let me take it, right? I mean, we did that on AMD this morning, right? We took it, locked in the profit, but we should have held. What's the emotional hurdle that you have to overcome when that number is 10 times that size? And for the math to work, right? If your risk to reward ratio is going to help you at all, like a 3-to-1, the asymmetric risk to reward ratio, you have to let it play out. If you're constantly taking early wins, then when you have a loss, the drawdown on your account is much more significant. The percentage of that drawdown is much more significant. So if we take 5 trades over the course of the week, right? 1 trade every day, and 2 trades are a winner, that's $600. And 3 trades are a loser, that's -100 for each trade, -300. So we've netted $300, right? But if on those winners, we cut early, like we did today in AMD, one of them could be 150, another one could be 150. That's $300 profit, and you've just basically broke even now. So you've had a flat week. So that's what we're doing, and it's tough. I mean, it is, the numbers start to mess with you, right? Everything else is the same. There's no different in what we did today with 1,000 shares versus 10,000 shares. How did that get set to 100? That's very strange. There's no difference in it. I mean, there are differences from trading from liquidity standpoint, and you can only take so many shares. You can't just multiply this out. Say, I'm going to take 50,000 shares on MU. You're not going to get it. And that's one of the skills that you have to learn. When you're looking at the spread, when you're looking at level 2, when you're looking, at the time and sales, and knowing the stock, how much liquidity is there. In general, you can just sort of say, it's this, it's that. It's a low cap stock. I can probably get filled with 5,000 to 10,000, maybe 12,000 shares, but you don't want to get left holding the bag, because you can get filled. Are you going to get out? Are you going to be able to cover, right? Are you going to be able to exit the trade? I'm holding 12,000 shares of stock X with liquidity of Y. Can I get out of that trade? And believe me, months ago, there's plenty of trades where doing things the wrong way and that liquidity's bit us. Probably, I would say the biggest thing that affected the very first trading was the spread. And the spread is the difference between the bid and the ask, right? On AMD here, the spread is really tight. I mean, it's basically 1 cent, back and forth, back and forth. But this can be, 20 cents, and it's just bouncing back and forth. So when you get in a position and you have, you can never have a 10-cent stop on that, because it's going to bounce 20 cents. So you're just going to get stopped out. And unfortunately, I hate to admit it, I don't hate to admit it because it's all part of the process, right? We were wrong. We messed up. What do you do from there? You try to grow. We took plenty of trades like that. Like you think, oh, okay, you're going to lock it in and it's going to go up from here. Stocks aren't linear. They bounce around in waves. Look at this. Here's a wave, 1, 2, 3. It's a wave. So you have to account for, the spread in that wave. So if I get in here at 38 and the spread's 20 cents, my stop has to be below the spread. So let's say it's 40, spread's 20 cents. So it's bouncing around down here to 20. Well, then my stop has to be somewhere below 20, right? Because that spread just represents how the price is bouncing back and forth. It doesn't account for moves up and down, right? Action. What if it pulls back? Well, that's what the stop is for. It has to account how much am I willing to let it pull back. The spread isn't a pullback. The spread is just the price action, right? It's just the price, the bid and the ask going back and forth. Hey, I hope everybody who's listening to this is like, yeah, we know. Why are you even saying this? This is such beginner stuff. Because at some point I didn't know. We didn't know. We made mistakes with it. It's like I said, it's probably one of the things that bit us the most in early trading. And it's probably one of the reasons I'm trading AMD right this second, because the spread is tight, right? Liquidity is good. These things were tested. That's why it was selected for the December of discipline testing. We know we could get in and out of it. I've traded 6,000 shares on this all day long, and probably, if I've taken 6,000 shares on this in and out 100 times, probably out of that 100 times, I've not gotten a full fill, probably 10 times, and sometimes it takes 2 hits on it to fill, but that's the liquidity. How much can you get in and out of safely? Anyway. What are we, 468 for the day, 2 trades, traded MU and AMD. It looks like we're starting to put in a little. Let's check the SPY again before we jump off. Oh, look at that, a little fake out there, huh? Be interesting to see people who were, because I know people had the SPY on watch to trade this morning. I wonder if anybody got caught in this. So it'd be interesting. Okay, 10%ers, I hope you're having a great day. I really hope that you're in the green, that you're in the 10%. We'll be back with you tomorrow, and have a great rest of the trading day if you're still hanging in there. Take care.